This is Ted Bauman from Bauman Daily. Before I start my video today, I wanted to ask you in your comments, tell me what you'd like to hear about. A lot of people write back and say, "Hey, I really like what you're doing, and I like the topics that you cover." But maybe you have more specific requests. Maybe there are things you'd want to hear me talk about. Maybe more specific, recommendations and whatnot. So please, in the comments, maybe after you've seen today's video, let me know what you think of the video. Let me know what you think of the video series, and also let me know what you'd like me to address going forward. So now, here's the video. Hello, everybody. I'm the guy what publishes the Bauman Daily newsletter, of which this video is a part, and the Bauman Letter, which is my investment newsletter. The markets have been bumping up and down this week. Today they're up. I'm recording this on Thursday. Who knows what'll happen tomorrow? It really is a weird time in the market. It looks like the bounce today is on the basis of low unemployment claims. So we're seeing a reversion back to some of the reopening trades that have suffered this year. I guess because people think that if we get a lot of employment growth, that means that the Fed is perhaps more likely to raise interest rates at some point. We'll start tapering again, and then that'll lead to a rebound in growth stocks, and so on and so forth. So that's really been the kind of message that the market has hung on all year. I mean, basically, it's been one of those kind of things where people go back and forth based on external news, whether it is the Fed, or whether it's the government, whether it's COVID, whatever it is. And I've been saying all year, this is a really hard environment in which to pick stocks. Now, the stocks that are gaining today reflect, I think, a mixture of things. But one of the things that I've noticed across the board is that there has been a big jump in renewable stocks, including some of those that we hold in the Bauman Letter that had pulled back earlier this year. And my topic today is it time to start buying back into renewables? Let's consider it. Solar energy produced less than 4% of the United States electricity last year in 2020. But the Biden administration has just said they want to take that level to 45% by 2050. Now that would be an enormous jump. And that would mean a complete rethinking of the entire power system, the power grid in the United States. Now, people say, well, you can't move things that quickly. It just can't happen. Well, think about it. 10 years ago, coal gave us half of the U.S. electricity supply. Just 10 years later, last year, late 2020, renewable energy outstripped coal as a larger producer of energy. So this is moving, and it's moving regardless of policy. It's moving because, as I've shown many times, renewable energy is cheaper than fossil fuels right now, thanks to developments in particularly solar and wind technology. So the question is this a good time to jump back into the sector? So let's look at a chart. This is a chart that of an ETF that we visited with our Your Money Matters a while back. It shows an ETF called QCLN, a nice cute name for the NASDAQ Clean Edge Green Energy Index Fund. Now, this is a chart that goes back about 18 months, I reckon, actually a little bit longer, or sorry, a little bit less. But you can see what happened. At the end of October 19th, sorry, this is over 2 years, there was really basically a small bump up in this sector. We saw it, like everything else, it was moving upwards when COVID hit. And then look what happened. During the course of COVID, during the heyday of the pandemic trade, it just took off like a rocket, and at one point it hit a top of around $90 a share. Now since then it's traded sideways. It's pulled back. I've included some Fibonacci retracement levels. Right now I would say we're at about 66.50. This stock could easily get back up to 90 by the end of this year, and I'm going to tell you just now why I think so. The problem is that an ETF like this is not necessarily the best way to play this, because we have to disaggregate the sector. Just looking down at the momentum indicators, it's been up or down. I mean, there's nothing reliable in that message except that probably it's oversold relative to where it wants to be. But it keeps bouncing up and down. At least the 50-day moving average is moving up. Or sorry, that's the 20-day. The green line is gradually moving upward, which is what we want to see. So now, if the renewable sector is kind of dawdling along, the question is, should you jump in anticipation of a big breakout? Now, the Biden administration's proposal would seem to be a pretty good, tailwind for this sector. And of course, as I just said, the private sector has been the leader in rolling out renewable energy, particularly at utility scale, because it's cheaper, because it sells, because yes, because there's some government regulation involved, but the bottom line is that this is the future, and if you want to make money, you get into the future early. So the question is, should we do the same? Now, here's where I think it's important, and this is something that I talked about previously with about renewables, is that if you look at the renewable energy sector in the same way that you look at the conventional fossil fuel sector, you can divide it into an upstream, a midstream, and a downstream segment. For example, in oil, upstream is exploration and drilling. Midstream is transportation, like pipelines. Downstream is refining and distribution. So here's a chart that shows how this works in the renewable energy sector, particularly solar. So here's the segment on the left. So upstream, which is, in fossil fuels, which is exploration and drilling, or, mining in this case of coal, the main products are silicon refiners, wafer and cell manufacturers, and panel manufacturers. Now, this has become a commodity market, right? It's difficult to score big gains in a commodity market because they are determined by cycles over which can go on for a long time. But this is a peculiar kind of a commodity because the wafers and cells are facing, an uphill, or rather an uptrend, simply because of increased demand. So yes, if you can find commodity companies to buy, that is, the potential for grinding out gains, particularly if they pay dividends. Problem is, most of them are Chinese and they're not accessible, and I would definitely advise against investing in Chinese companies right now. So one investment strategy that you can play is to basically invest in the futures for things like silicon. Now, that's not always easy to do, but I'm going to show you just now a chart that shows the potential benefit here. This is a chart that shows manganese silicon futures for September 21. That's a pretty good looking chart. And look at those. This is a weekly chart, and look at those big jumps after a period of sideways trading going back to late March, early April. So there's money to be made there. Now, one of the ways that you can make money with something like this is by investing with certified futures traders, which are basically money pools like hedge funds that trade in futures. And, that's a way to do it. It's pretty difficult to trade these futures as an individual, as an accredited investor you can, but it just shows you that the upstream part of this market is pretty responsive right now to the potential for future demand for solar panels. Let's go back to the table and look at the midstream segment. That's utility scale solar generators, transmission lines. It's a utility type market. So really what you're doing is you're getting into that market for the dividends, just like you would with any utility. It's a buy and hold strategy. They tend to be far less volatile than the overall market. They tend, to do very well in a dip. So, buying utilities in the renewables segment is really no different from doing them in any other kind of utility, whether they're electricity or water or gas or whatever. It's the same kind of market. Now let's look at a big player in that market. This is a chart for Brookfield Renewables Energy Partners, and again, what we're seeing here is a big spike in the price of this particular L limited partnership in February this year, and then it's just pulled back and traded sideways. Again, I've included Fibonacci retracement levels. We're right now trading at around just under 50 a share, but at one point it was close to 50. It was pushing 50. So one of the things we could see is a breakout above 50. Certainly that would be the first target price, but that's a pretty good gain. You get 25% if it gets back up there. And of course, if there's a breakout beyond that, let's say if the Biden administration and the Congress manages to pass a bill, then the next thing would be a new level, which could take you up even 50% on this stock if everything falls into place. Just looking down at the momentum indicators, of course, we are seeing that MACD is rolling over, and we're seeing momentum coming back in. It's pretty fleeting. It's not reliable. So we're still looking for the key elements of a breakout here. So let's go back to the chart again and look at the downstream. The downstream includes regional and local energy distributors. So in other words, the smaller companies that like in Texas, for example, during that big cold snap, the ones that caused all the trouble. They sell electricity to people, by tapping into the networks. But you've also got a whole bunch of other companies that are moving in and doing things that a lot of people don't know about. One of them is battery storage, because that's the critical factor. It's not enough to have sunlight and wind. You have to be able to store the energy, because you have no control over sunlight and wind, at least as far as the weather is concerned. You've also got energy monitoring software, and using AI to monitor the use, the production and use and distribution and battery storage of renewable energy is a critical thing. And I think a lot of people have overlooked that. And then finally, you get household and business level equipment like inverters, panels, and all that kind of stuff. Now, part of this market is pretty plain vanilla, but a lot of these companies are in growth stage, and that's where a trading strategy would be more appropriate. So let's look at a company down here. This is a company called STEM. They are in that software segment of the basically the downstream part of the renewable energy pipeline. Now, this is a relatively recent IPO. Like everybody else, it went absolutely crazy at the beginning of this year, and then it fell back. I've chosen to look at retracement levels based on its price really in July, because it's fallen a lot since then, and really for no particular reason. I think it's fallen because it attempted to break out above the levels that it hit back in January. I think the market understood that higher peak in February was just part of irrational exuberance, but it tested that level that it hit back in January, and then it pulled back again. But again, this is just a huge forward opportunity. And if you want to make a lot of money quickly, you could trade on a stock like this. Now, it has been trending downward. The momentum indicators still show weakness in this stock. But again, it's one of those kind of things where it's got nowhere to go but up. It's a great company. It has every day it's rolling in new contracts to help with their software to manage battery storage and that sort of stuff. So what's my current strategy? What would I recommend as a strategy? Well, a lot of people in the US have tended to focus on the upstream and the downstream segments. That they focus on things like solar panel manufacturing, or they focus on things like installers and the companies that provide finance for household and business level stuff. The problem with that, I think, is that's first of all, the upstream part of it is really going to be more of a commodity market. Eventually, solar panels are going to be something that exhibit the same kind of price performance as a copper or an oil or anything else like that, depending on global supply and demand, trending upwards, obviously, relative to oil, because it's the thing of the future. But it's going to be a more difficult market to play, again, because so many are Chinese. Now, we could get some local North American, well, let's just say non-Chinese manufacturing going. If that happens, thanks to sanctions or trade wars or whatever, that could be an opportunity. But it's really a commodity segment, and we'd have to wait to see. Now, the downstream has lots of companies, but they're not yet profitable. They're more risky, like STEM, for example, big run up and then a run back down again. But their long-term future is there. So if you want to, if you're into trading, if you want to try to make short-term gains, you might do something like that. But my bet, the thing I like better than anything else, is midstream. Now, midstream is essentially the big players. They are the big companies that are putting up solar farms, wind farms, and transmission lines to take that power, renewable generated power, into local areas where local distributors sell it. Now, the critical thing here is that this is really a long-term sector which is going to grow. I mean, there's no way that it's not going to grow, because no matter whether the government passes bills to encourage this or not, these companies are getting bigger. The problem is that it costs a lot of money to put up these renewable energy utility scale installations. So there's a lot of debt involved, and that means that the margins tend to, they don't expand at the level that you have with companies that don't have the physical requirement, like a software company, to build new product. In software, you get something good, your additional cost of sale is practically zero for every new unit you sell. Not so with these companies. So you're going to get steady growth, but the key thing here is you want dividends. Now, an excellent way to do this is to look at an ETF, which I mentioned a couple while back, called RNRG. It's the Global X Renewable Energy Producers ETF. Now, the cool thing about this is that it covers the whole planet, and it gives you a way to invest in utility scale renewable energy producers that are not in the United States, that are not listed on our bourses or on our market. And you know, if you want to set up an account to trade in other countries, you can do that too, but that's very difficult for a lot of people. So this is a way to play it. Right now, it's trading pretty much at around 20%. Its 52-week high. Now it yields 2.6%. But here's a chart that shows you the potential here. This is RNRG going back to let's see, this is about a 5-year chart. Now, it hit a peak just before COVID, like everybody else, and then it pulled back, and then it raced ahead. But look where it is right now. It's trading right at that that level. It clearly, the market is waiting for a breakout, or we're waiting for a breakout here. We see momentum indicators just beginning to roll back into positive territory. It's peaked above 50. The RSI MACD is rolling over, resetting at the 0 line. But the key thing here is that 50-day moving average. It continues to creep upward, and eventually it's going to get to the point, I think, where we see a big jump, because that price point that it hit back in February 2020, I think, was probably the resistance level that it deserved to have then. But look where we are. We're more than, we're almost 18 months later now. And that stock, or rather this ETF, needs to jump up. Now, of course, as always, there's other ways to play an ETF like this, and one is by looking at their holdings. So here's a chart that shows the top holdings for RNRG, and as I said earlier, a lot of them are outside the country. There's a German on the top, there's Brazilian, but look who's number 3. That's Brookfield Renewable Partners Limited Partnership. Again, and I showed that a little bit earlier, also trading in a range, probably waiting for a breakout. And then you've got some more. I think that's Portuguese, and then so on and so forth. There's a New Zealand. There's the other one down there, though, is Sunrun. Sunrun is a US company, so that's one that you can invest in. Basically, I think that the midstream industry is where you want to be putting your money right now if you're into it for the long haul. If you're a trader, then I would start looking seriously at some of these smaller innovative stocks that are developing, or companies that are innovating, things like STEM, for example, that are looking at the software revolution involved. The battery storage is a big sector, and that's really where you want to look for short-term gains. The problem is that it all depends on those midstream companies rolling out and expanding their production capacity, and that is going to depend a lot on policy. So, as we've done so many times this year, let's wait and see what Congress does. Let's see what Joe Manchin allows and what he doesn't. I'll talk to you again next week.